we are sort of midway through showcasing companies and business propositions. Not everybody is looking for money. Sometimes people are just showing us how they've positioned themselves in the space, and sometimes people are looking for projects. So it's all a whole interesting space. You guys, the audience, you get it. It's very quick. Your questions have to come to me before the end of the session, otherwise I can't use it. To the presenters, bring your thick skin, don't be offended. When I get up, it's because there's only 3 minutes left, and I want to put 1 or 2 questions from the audience to you. So we're going to be snappy. I think we've got like 4 or 5 conversations. I have to count them, which is difficult this time of the day. And then we have a tea break, and then we have a couple more. Okay, so this is now a very interesting part of the day. Antler Gold, I'm so disappointed, but Christopher's going to get me over it. It's not a gold mine. It's not a gold mining company. So clearly he sneaked in somehow. I don't know how, Anthony. The good news is he's living proof that you can survive a coup in Africa. So he struggled to get out of the DRC. So apparently it was not a very successful coup, but a very disruptive one. Yeah. So we really appreciate the effort you've gone to be here. Christopher, please feel free to come and share with us what the hell is it that you do in Antler Gold if it's not gold mining. Huh? You see your timer now.
Perfect. 13 minutes. Got my marching orders. So. Hi, good afternoon, ladies and gentlemen. Yeah, I've had a bit of an eventful trip, so apologize for the casual attire. I'm the president and CEO of Antler Gold, and contrary to its name, we don't have a gold mine yet, and we're actually not only exploring for one single project or one single commodity. We are what you call a project generation company, a well-known business or strategy that has been deployed in more advanced areas of exploration, such as Australasia and North America. And we're now bringing that model down to Africa, and we hope that it's going to generate and position a lot of our African projects as it moves into playing a major role in this energy transition and all the other wonderful buzzwords. So we are listed on the TSX, so I do have to put in cautionary language and the other legal disclaimers. I'm not going to go through it now, but I do encourage you to please go to our website and read through them. I am going to be making forward-looking statements. So I think what our company is trying to do is we're passionate about Africa, and we firmly believe the position Africa is going to play in the new economy and as the global economy changes and shifts. So what we've tried to do is we've tried to marry all stakeholders on the value chain from the early stage of project generation, conceptual thoughts, all the way through to mine production and exploration. And as we are all fully aware in this room, that takes a certain amount of capital and also a certain amount of acumen to allow these transactions to happen swiftly. So what we've done on our side is we've put a risk management business in process that allows us to go to the earliest stage of project generation. We tie it to capital, and then we retain equity, upside, as well as a royalty on those producing assets. So just to explain project generation business model versus the traditional junior. A lot of the traditional juniors normally have 1 or 2 flagship projects. There's a lot of high risk early stage capital that goes in there. And the chance of success on these projects is extremely low. We've seen multiple projects come and go over the years, and they fail for various reasons. They can fail from not technically viable, to metallurgical concerns, to jurisdictional concerns, as well as other concerns such as a fall-off of a market, etc. Those expertise that normally drive that is you'll normally have a strong promoter or CEO who sits in it. He'll promote to capital, he'll continue talking, and you'll have a VPX or a normal exploration team that then runs it. And the primary funding of it, and this is where the mode comes in, especially for listed companies, is equity raising, which is highly dilutional during this earlier stage of exploration. And then the discovery scenario normally that comes out of this, I've covered off already, is very low. Not a lot of companies are having extreme success or getting anywhere with the producing asset. We're a project generator. We focus on putting together multiple assets across various commodities and various jurisdictions. And what we do is bring them up the exploration curve that allows us then to jointly attract capital from various partners, be that through entire buyouts where we remain with the upside, or we will do equity purchases in a normal earn-in. And not only does it allow us to get funding into the projects, but it also allows us a better shot at making a discovery. We all of a sudden have 6 or 7 irons in the fire, and it allows us to grow our expertise. It allows us to build a strong reputation with capital, especially foreign capital, and it allows us then to potentially get access to non-dilutive funding that would come from one of these producing assets. And we would get that funding through our royalty structures or our equity structures that remain within the project. I like to say it's a unique business model, but as I noted in the beginning, this business model has been deployed in Canada, other various parts of North America, and Australia. I myself have successfully listed on the Canadian and the Australian Stock Exchange 8 different companies. 2 of them have gone through a buyout with major companies. And all of them were in Africa. These projects were in Africa. And the problem that we found during that whole process is the projects were not held in an optimized way that allows for funding to come onto the project as soon as possible. And what I mean by that is, for example, the lithium boom that has come and gone twice now, is there are a lot of quality lithium opportunities throughout Africa. When we are able to identify these opportunities, by the time we take them to foreign capital or other capital markets in order to acquire capital to flow into the project, due to it not being optimized to allow for a transaction, a lot of the time, more time and money is spent optimizing the holding structure of the project rather than the money flowing into the project. And we've seen examples happen during this lithium boom where projects never got going, and now that the lithium price has eased back, there's no appetite to spend money in the project, and now these projects basically stay vacant, waiting for the next boom. So we act in a counter-cyclical manner. I've got 6 minutes left. Counter-cyclical manner that allows us to take non-dilutive financing from ourselves. We go ahead of the cycle. We acquire, and I'm using lithium as an example now, lithium projects from other stakeholders. We put it in an optimized vehicle that allows for direct investment and potential listing on other exchanges. So the company, we take the initial risk. From that perspective, we do early stage work, be it de-risking of certain geological concepts or de-risking of metallurgical concerns, etc. And then we go and market it to foreign capital and other capital that allows for investment to come into it. And we sign what's called an option agreement, and then it moves up our business model and it allows us to take it further. Where Antler generates its value is we get short-term cash flow from the cash payments that come to us as a repayment of that risk capital that we put in the beginning. We also take equity in the projects, moving forward, and we'll be there for the long term. And then we always retain a royalty for any future producing assets on that project. Royalties nowadays are becoming extremely liquid, and they are becoming transactional. So the company has 3 places where it can liquidate its opportunity: through the initial cash payments, through the shares and the equity we hold on the project in the listed company, and then the royalty for maybe a potential buyback or a sale or on any future production. So again, how has this model been working? We've been focused on gold. Gold has previously lost its shine and starting to get some of its shine back. We've started putting together projects throughout Southern Africa. We've also focused on rare earth opportunities and other new age metals or battery mineral opportunities. We currently have 8 projects in total that span across just shy of 900,000 hectares, and we have about 14 applications or partners that we are currently earning into for various commodities throughout Africa. Because we are not pressed from a cash flow perspective to move these projects along, we can sit, if there's no transaction that is happening on our gold projects, we have the ability to sit and work them while the market is depressed, and then sell them when the market is high. So again, we're acting in a very counter-cyclical manner, and because we have diverse commodities, it also allows us to sell the commodities that are in the upcycle when the other and finance the commodities that are in the down cycle. There's just some projects that are currently fully permitted, fully accessed, and we are currently working. As you can see, it's heavily weighted towards gold, but we are in the process of diversifying that, and we do expect over the next 6 to 12 months to do transactions on that.
Christopher, yeah, sorry.
Go ahead.
No, I need to put a few questions to you. Do you want to wrap it up? Are you ready for questions?
You can go for questions.
Yeah, sorry, man. So you say this is a business model that has had its time in more established jurisdictions.
Yeah.
Can you give us company names? Who are the Canadians and Australians that we would be able to relate to like this?
So the two companies that we can relate to, one is Altius Resources. They have got a current market cap of 2.5 billion Canadian dollars. And then there was a company, Altius Resources. It was listed in London. Currently, it sold and did a merger, and they're now EMR Royalties. At the time, they had a market cap of just shy of a quarter of a billion pounds.
And is the pure royalty play the end game? Not this where you've got so many royalties, you don't need to go out into Africa anymore.
So I don't think it's just pure royalty, it's equity and allows us to do other structured financing. We want to, in essence, start becoming a private merchant bank for exploration moving forward in Africa, and that will be funded through the royalties and equities from the company.
So whilst the audience can express their, would you invest, you're not looking for money, but it's cool. It's just a test to see whether the audience like the angle that you're taking. So you're welcome to take up your little QR code and just go to the Slido platform and express your yes or no view. So what country in Africa would you not play in? I mean, you come from the DR, from the DRC. So which country is a no-go for you?
I think it's always a tough question to answer. These things come and go. Currently, we would avoid war-torn countries. We have to, in good conscience, not only protect our shareholders, but protect any partners that come in with us. And if we are not able to have a secure tenement, our business model is obviously of no viability for us to do deals with them. We do, however, like to go ahead and look in places, because these cycles take long, and we found through our experience that Although sometimes there's a change in direct leadership, there are strong and well-suited laws within that country to protect yourself.
And then just quickly, because we ran out of time, commodity. I know you don't want to tell us where do you take this long contrarian view. You gave us the example of gold. But I mean, if you could sit and say, there's one commodity I really am excited about, what would that be right now?
Yeah, copper and gold. Both, unfortunately, I'm a gold bug, so I have drunk the Kool-Aid a little bit, but gold is always good, and copper right now is really looking well poised, so we're focusing a lot of effort previously and now on copper projects.
Thank you. Thank you very much. Thank you. The audience is fast asleep. We've got more people online that participated. So clearly the online people are participating and the in-the-room audience fast asleep. We got to just more than half of people sees this as an interesting model. I personally think it's a phenomenal model. I mean, I think you put numbers on a few roulette table. Andy doesn't like gambling, but so we're going on from the non-gold company, but we do get the gold in the name, to online now. We're going to be joined by Dennis Edmonds. And that is Dennis because Gerard Kisbey-Green dropped me. He owes me a glass of wine. You just tell him that, okay? I know he's your chairman, and he may probably have the authority to fire you, but tell him he owes me a glass of wine. Apparently, you're an upgrade from him anyway, so we're very happy to have you in your log cabin. I want to know where you are. You've got a brief 10 minutes to share with us a little bit about Kazera Global, early stage asset in the Northern Cape. Over to you.
Well, thank you very much. Lovely to be here. It was a bit of a surprise to me as well. I think Gerard owes me a glass of wine as well. So
perhaps we should have a bottle together, yeah.
A sensible idea. Let me share our presentation. Right. The company is called Kazera Global. We are listed on AIM. We are, sorry, let me just move on. We are an investment company focused on developing assets into production. We have assets, our major assets at the moment are in South Africa, in the Northern Cape, and they are Deep Blue Minerals, which is a diamond production company, and Whalehead Minerals, which is a heavy mineral sands production company. The board, very briefly, is myself, Gerard Kisbey-Green, who's already been introduced, Jeff Eyre and Peter Wilson. All of them all of us are transactional. All of us have been involved in a number of different transactions, which means that Casera works as a company very well in terms of a balance of the board and the ability to do a number of different things. But our focus is very much on transactional work. So it's taking companies, making them into something which is a success, and then considering what the next step is. We'll go into that in a moment. So first, obviously, an investment destination for individuals, our shareholders. We have a board which has a wide range of experience, a wide range of connections, and the intention is to use the proceeds that we generate either to do more deals or to return to shareholders. Our flexible investment approach is really worldwide, currently focused on Africa. We are not focused on any particular commodity. We will do a transaction if we believe that it is the right transaction. And we will do transactions in various forms and structures. My background is as a corporate lawyer. And Gerard's as an investment banker. So there's the ability to structure deals in ways which are appropriate and innovative is very much part of our structure. The most important part, though, is when we look at doing any transaction, it will be on the basis of what we can do with it, and how we get out of it, how we get shareholders value from it. The strategy is kind of proven by the first investment that the company made, and long before I joined, was into a tantalum project in southern Namibia. We managed to, that needed a lot of money to get it into full operation. A Chinese company based in Namibia made us an offer which we felt was attractive and made sense to us, and we elected to take that there because what it did was it gave us cash, and we are great believers, particularly in the last couple of years, have been great believers in actually cash being important. And it allowed us to develop our other operations, and it allowed them to carry on and develop the Namibian operation. They still owe us money. They're in breach of their agreement, but from our point of view, they're not the operation isn't costing us anything. We have full security over it, and we are in negotiations with a number of looking at a number of different solutions. So our current investments then are heavy mineral sands and diamonds in the Northern Cape. It's that tiny little red dot on the left-hand side of the Northern Cape. We're just below the Orange River, in the area between Alexander Bay and Port Nolloth. The heavy mineral sands company is called Whalehead Minerals. We own 60% of it. Antler Gold, which is also listed in London, owns 10%, and our BE partners own 30%. It's a very small deposit. It's only 5 hectares, and it's a limited mining permit. But the small deposit is interesting because it keeps getting replenished by wave action. A very good example of a similar project is Tormans, which is about 450 kilometers down the coast from us. In 2013, they declared their a resource of 2.7 million tons. And by 2020, they'd already mined 13.87 million tons. And that is because of wave action and the fact that the deposit is constantly replenished by the action of the sea. Ours is a particularly interesting project in that it has a very high economic value. So our heavy mineral sands, once you've stripped out the silica, the beach sand, rocks, and diamonds, which we'll come to in a moment, it's got a over 97% economic value, predominantly ilmenite, then garnet, and then zircon and rutile. In our modeling, we've excluded the zircon and rutile, but they have a distinct value. They have a value of almost 10 times the value of the ilmenite per ton. So they're an important part of the future. But in our current modeling, we have just simply excluded them. They'll be stockpiled and will be processed. We're looking at mining rights. So we're actually applying for mining rights rather than prospecting rights over adjacent areas, which will increase our mining area by 60 times. We are sitting at the moment waiting for the nuclear regulator in South Africa to approve the operation. The nuclear element was a little bit of a surprise. We didn't realize the amount of radioactive material we had was quite as high, but that's also good because the value of that material is much higher. So it's not been the worst thing that's ever happened. And we anticipate getting that regulation fairly soon and getting into production fairly soon. So we are ready to go into production. We have built a plant which is specifically designed for our heavy mineral sands. We will expand that plant to include the separation of zircon, rutile, and monazite as we go forward. But right now, we have a plant which will enable us to sell a product which will be that 97.1% pure heavy mineral sands, simply by removing beach sand, rocks, and diamonds. There's a strong demand for heavy mineral sands. When we originally looked at the project, we had a competent persons report done on an adjacent area, slightly inland, that they gave that 5 hectare project a value of 150 million pounds NPV. That was based on the ilmenite price of $217 per ton, I think. and currently we're looking at 275, 280. Of course, that project was also done on an inland deposit, so it wasn't constantly replenished. So, we're very, very confident in terms of even the small 5 hectares has got a great value. Adding something which is 60 times the size of that to it, probably the purity will be slightly lower, but nonetheless, it takes us into a very, very serious deposit. Moving on to Deep Blue Minerals. Deep Blue Minerals is the diamond mining operation. Again, the ownership is 60% us, Tectonic has 10%, and our BE partners have 30%. It's based in the Alexander Bay mining area, which is controlled by Alexcor, which is a government-owned entity, which is sort of set up to mine diamonds. The concept was that Alexcor would process all diamonds mined by contract miners in the area, and it would then sell the diamonds. The processing part hasn't worked out particularly well. They've had some difficulties and inefficiencies within their plant. So we have spent the money on building our own plant, so we're able to do our own separation of the diamonds, and we've also got our own flow sort machine, which allows us to do the further separation of diamonds from rocks. And the flow sort machine works on the basis of, it's a sealed unit effectively, and what it does is it takes the refined gravel and it fires an X-ray at them. Diamonds refract, of course, so do other things like shells and some rocks. And so it then sends an injection of air and water to knock the refracted material to one side. That there goes into a sealed box. That box then gets taken to Alexcor and is sorted by hand in our presence. So it eliminates all chances of any kind of irregularity, but it also gives us control over making sure when we produce gravel, we can actually produce diamonds. The Alexander Bay area, as you can see from that picture, is big, and we can not only mine diamonds from where we're mining heavy mineral sands, but we can and have got access to a number of other blocks. Alexcor's diamonds are very well known. They're relatively small, but very good quality, a yellow diamond typically, and there's an unlimited number of diamonds still in the area, and a lot of contract miners have left land mining because of the issues with processing. Not everybody has had the fortunate luck of being able to go in and build their own plant. The
Dennis,
ESG commitment.
I need to time pressure you a little bit. I need to get some questions in the remaining 2 minutes, please.
Sure.
Did I shut you up? I was just telling you to speed up. Sorry about that.
No, I'm just about finished. just about finished.
Yeah. Okay,
The
cool.
environmental point of view is great because, as I say, our area is replenished by the sea, so we almost an automatic refurbishment of the mining area. Socially, there are about 7,000 people in the Northern Cape. Any mining operation successfully done will have an enormous impact on them, and we're very focused on making sure that happens. Governance, well, I think that speaks for itself. Any listed company is very strict on that. So that's where we are. I'm really excited about the future. We spend a lot of time and money getting to where we are, but production is imminent, and that's the exciting part. And when we get into production, we get into profitability.
Thank you so much. And thank you for standing in for Gerard. I don't know if this Mongolia story is what he tells his wife or whether it's the truth. We'll just follow up later on that. A quick question. Would you do transactions in coal or oil?
Yeah, I don't think we'd be averse to doing transactions in coal or oil. I think realistically, particularly things, coal is a big part of the steel making industry. I think coal gets a very bad name because it's used in so many different ways, and some of it can be very dirty. In the steel industry, coal it's a relatively clean process. It can be made cleaner, but the world demand for steel is a ongoing demand, and it's got to be met.
And your shareholder base don't have a problem with that. I mean, you will deploy shareholders' money to that if you see the right opportunity.
Yeah, we would. If the right opportunity, our responsibility is obviously a combination of environmental and generating value for shareholders. And if we saw a deal which we felt would be transformational in, say, coal, definitely that is something that we would look at.
What is the size of transaction that you would contemplate? I mean, what's your balance sheet? Can I come to you with $1 million deal or $1 billion deal or somewhere in between?
Bernard, we're in a situation where we've got a couple of very interesting shareholders who will support a lot of what we do. It's a listed company, it's an investment company. So if we were to take an exciting project to the market where we felt we could raise the money, we would do that. And if it was a $1 million project, well, we probably wouldn't go to the market. But if it was a 16, 20, $30 million project, we would need to go to the market. But if we felt we could get the support and it was a deal which was going to make an enormous difference to Casera and its shareholders, yeah, we definitely look at it, and we would be pretty confident we'd be able to find the money.
Dennis, thank you so much for joining us today. We really appreciate your time, and we'll hopefully get a further update from you in the future. Thank you very much.
And it's been a pleasure. I look forward to having that glass of wine with you.
Absolutely, that's a deal. And that's how my liver problem developed. See, you guys don't know how many glasses of wine I have to get people to attend, so this is I take one for the team. We're going to talk anthracite. We must be out of topics, Nosipho? Why anthracite? Ach, nee, man. Yes. Madam Anthracite, you've got 10 minutes,
Thank you.
Good luck with that.
Thanks. Good afternoon, everyone. My name is Nosipho from Qinani Mining. I am a new kid on the block. I am a BE company. I know that's a swear word in the mining industry. We own 49% of the project. In the morning when we started, we had people saying, would they invest in coal? And there was a 6% number of people, or 6% of people in the room that said they would invest in coal. But when we had the last session, we actually had an understanding in the room that actually, if we are talking about a security in energy, you actually do need coal. So with those words, I'm just going to say, I've said we're a big company. We own 49% of Proxo Mine. Why we've come in here, the big thing is that we are looking for an investment. And I actually think whoever is in the room here with us has it in us that we could change from being a cat to be that roaring lion. Okay. So we are here looking for investors. We have a Brownfield project. We have approached some FDIs, and they have all said, upgrade your geological report to actually a proper CPR report. To get to the upgrade, we would need just shy of 10 million, but to actually get the mining project up and running, it needs 75 million rand. But it looks like then we are looking for somebody who could either help us in funding the initial product or invest and be with us so that we go the ultimate journey. As I've said, it's a brownfield project. The resources are still in excess of 12 million tons. This project, the mine itself, it was being mined some 20 years ago. So we know that there are coal reserves of good grades of anthracite. The coal seam is about 3 million rand. We took that picture it's about 3 meters. We took that picture about 2 months ago, and you can see that guy is standing, and you can actually easily mine. The mining right and everything else has been secured. It's got a rail siding, which is about 20 kilometers, and Transnet is sort of operating there. We've got a good relationship with the community around for now, and we do know that those relationships, if they are not maintained, they sort of change from time to time. So for those who do not know the KZN area, the northern KwaZulu-Natal, we are approximately 5 kilometers north of Vryheid. We are 74 kilometers northeast of Dundee, and this is where some of the discard that was mined is being processed. So we are actually processing that at the moment. We are a little bit far from Richards Bay, but we actually have where there's also other anthracite mine that we could actually sort of be collaborating and working with. So if one looks at that with the mining rights that we have, you can actually see the 3 farms that we currently own. Then I think we'll see in the next slides, when one looks at from the geological report, we actually have in excess of 11 million tons that are still there, which means production could be for the next 10 years. So what one noticed, we've actually divided this into 5 blocks. You actually have the areas that are in gray are areas where we have that were already mined at the time. But you also have virgin areas that are in blue that still have to be mined. So what needs to happen now, we actually need to actually start drilling holes now to get the actual audits of where we are going to be starting to mine. What we have done here, just sort of moving on, looking at the assumptions, we are going to use a contract miner, and we also have a portable wash plant that we're going to use. And we've looked at the price of anthracite, and we have based our assumptions sort of much lower than what it actually is. So even if the price fluctuates, we should still be in a position to make good profit. We are actually, there were dumps that were mined at that time, which at the moment we're selling as discard to a company that has said, if you guys start mining, we would be able to take all your anthracite. So we are selling those discard at 210 rand, and we actually worked that in terms of what the actual scenario would look like, which then if one looks at financial terms, as I've said, the project has got a 10-year lifespan. You are actually looking at a 37% gross profit, and we should also be able to actually pay back the money. The 75 million rand, we've already worked it out that it could be paid back in less than 2 years.
What is that bottom thing? ADS, what is that? What does that stand for?
That stands for, it would be talking to the rate at which the loan would be repaid.
ADSCR.
Yes.
Okay. Thank you.
Then if one has to break this into phases, we are saying at the moment, we just need to drill 2 holes. Maximum, it would be 4, but we've worked on 2 in terms of what we have been advised. Then we need to be able to get a mining engineer to draft our mine plan, which then would establish exactly where the audits are. So that should take about 3 months. Then we get to the second phase of site establishment and actually getting all the contracts signed, etc. Then removal of the overburden, and we sort of start mining. So therefore, what makes this project lucrative is the fact that it's a brownfield. People have mined in there. We know that the resources are still there. It's got a 3-meter seam. It meets the mining charter requirements. It's got a BAA, and we are looking at realistic financial ratios. That's all. Thank you.
Excellent. Thank you, Nosipho. Questions? I will ask that you guys go onto the platform and express your views on whether you would invest in a company like this or not. Remember, if you say yes, it links automatically through to her, and you owe her 10 million bucks. Eh? So just, no pressure. Yeah? It's just 10 million rands. Come on, guys. I mean, see, I've put them off. I'm so sorry.
You know,
I've scared them all off now.
Better than the 6%.
But at least,
I can take that.
You're 10 people already, so you'll be funded. Questions? What type of funding are you looking for? And the rest of the question, are you amenable to being diluted to the minimum 26% BEE shareholding? So are you prepared to be diluted in order to raise money?
The answer is yes. We are open to any form, be it debt, be it dilution, mezzanine, whatever. We are.
Even white monopoly capital now, I'm seeing that. Yeah, I'll talk to Rupert, my friend, and see. More questions. When there's a name to the question, I'll give it to you. So these are just questions that come through with that name. What is the management structure? Is there someone with a successful track record of bringing a project into production? So is there a miner in your team?
There is a miner in our team on the 51% side. We are 49%, and then the 51% is actually people that have actually run mines that are competent.
Is this project really as profitable as you are saying? Somebody is calling bullshit on you, and it's not me. Why not just sell to an established miner and cash out? So why don't you just flip it?
Well, I actually think the idea of us coming into this environment was because we want to be miners. We are willing to share or to give out a stake. Even if we were to sell completely, we would still go and buy elsewhere. It's just that this has been our entry point, and we would want to be part of the value creation.
And an obvious question, which I think comes via Guy Richards, is why did they stop mining 20-odd years ago?
At the time, the price of, because this is an underground mine, the price of coal went down, and to an extent that it was more expensive to mine than to actually, to what they were getting at the time. And there were sanctions, and then the people at that time stopped, and they kept on selling, and it sort of changed hands with poor management, and ultimately the operation stopped.
Andrew Johnston asks, do you have the required mining and environmental permits? Everything
is in place.
Even a water use license?
Yes.
Can we buy the water use license for 10 million? We'll just buy the water use license and you can keep the anthracite, huh? Sure. Now, I'm going to get you some free geological advice. Not the full 10 million, but some free advice. Yesterday, a very old geologist, evaluation expert, Andy Clay, gave us a lecture which I still don't understand about the towers, the twin towers. She's going to drill 2 more holes. She's going to drill 2 more holes. Is that enough?
Doesn't work for coal. I actually think, in actual fact, up till today, 75 holes have been drilled.
75?
Yes.
And your
so
2
in
holes
other words, I could send those to Andre to
get free advice. So tell me quickly, the 2 holes, are they just sort of confirmation holes?
These are the confirmation holes.
Obviously 2 holes can't achieve a lot of additional data.
No.
So talk to us about timeline. It's obviously subject to funding. If you were tomorrow get into money, when is this a mine?
We've actually said the first 3 months would be used just to complete this to a CPR, and then the next 3 months we would use that for mobilization, and then after we go straight into mining. So we are still looking at a 6 to 9 month period.
You can say about mining what you want, but we attract amazing, special, brave people. Amazing, special, brave person. Thank you very much. I love this story. Thank you very much.
Thank you so much.
It's a pity it's anthracite and not gold, but hey, you have to play with the toys you get dealt, eh? We are having one more presentation. Somebody on my team is on a final warning. There's another coal company. How to succeed in the challenging coal mining market today. Selim, Kaymak. You can come and pronounce your name and surname correctly, and then abuse my name and surname in return.
No problem. Thank you. Thanks.
So that timer is you and me together. After 10, I stand up and you give me time to put questions.
Cool, perfect.
Thank you.
And finally, I'm the last one talking about coal, right?
I hope the last one for coal, cheese.
Okay. Ladies and gentlemen, good afternoon. My name is Selim. I'm the CEO of Alpha Resource and Investments. We operate in coal mining industry and recently diversifying in base metals. So before we start talking about the challenges, I think definition of junior mine is also quite crucial to understand the concept and to understand the classification. So internationally, the term junior mining generally refers only to prospecting companies involved in the early stages of mining development. This is particularly true for Canada, where junior exploration companies are supported through the Prospectors and Developers Association of Canada. However, in South Africa, the term junior mining has taken on to a wider meaning and includes, in addition to exploration companies, small to mid-tier producers. It is always better to, according to Stats South Africa, COVID-19 pandemic, junior miners, including coal production, contributed about 8% to SADC region's economy in 2019. The COVID-19 pandemic presented challenges to junior miners in SADC region and affecting coal production and leading to a 1% reduction. So it is due to movement restriction and disrupted global supply chain. And luckily, after 2020s, that 1% contribution is being recovered. According to the Mineral Council of South Africa, junior coal miners are significant players in South African coal production, making up to 30% of the overall output. In 2022, South Africa's mining sector contributed around 1.2 trillion rand to the economy, with junior miners, including coal producers, contributing 88 billion rand, which is 13.5% of entire mining contribution. Again, junior coal miners play a crucial role in meeting energy demand and supporting economic development. Challenge faced by junior coal producers, despite the mining charter of 2016 required 26% black ownership in mining companies and Eskom's mandate for junior miners to supply 40% of the thermal coal, the aim is to boost the involvement of junior coal miners. However, these companies face numerous challenges despite the support mechanism in place. So there was a session before the lunchtime, we were talking, I'm just going to skip them a little bit faster. So these miners in Africa face challenges in securing funding, with about 70% experiencing constraints in exploration and production due to the insufficient financing, according to Mining Technology Report. In the continent and also in the region, junior miners can diversify funding sources beyond traditional bank loans and engage with government support programs. Compared to larger established miners, the scale of operations and limited resources can make it challenging to access the funding needed for expansion and development. Solution could be collaborating with larger coal miners can help junior miners to gain access to larger market and gain recognition in larger scale. Coal mining companies entirely, when it comes to export, face challenges due to limited rail capacity, especially junior coal miners relying heavily on trucking for coal transportation. Falling coal prices may take trucking cost unsustainable in export market and jeopardizing the profitability. Therefore, junior miners are not being left with too many options, but more in market diversification and also logistic diversification and more utilization and optimization. Another major problem for junior coal miners, as per the report by mining technology again. 40% of junior miners struggle with maintaining positive relationship with local communities, mainly due to conflicting interests and environmental issues. This was a very interesting point. So the solution, again, to follow the proper mining practices, implementing strong environmental management practices in mining helps to minimize the environmental impact. So waste management, water conservation, air quality control, and land rehabilitation with the region can minimize these risks. According to the article, which was published by Mining Weekly in July 2023, between 2020 and 2023, junior coal miners in SADC region saw significant opportunities in both local and export markets. So when we look at the separation of the coal production of junior miners, we can see 60% of the production was in local and 40% was on the export side. So South Africa produced approximately 230 million tons of ROM coal in 2023. Approximately 37% of the coal is exported. According to the energy balance compiled by the DOE, coal constitutes approximately 72% of total primary energy supply in South Africa and is mostly used for power generation. And in 2023, the Eskom power generations reduced approximately 6-7%. And of the total supply available for the country, 83% is used in the transformation stages, where majority is used to produce electricity, which is 74%, while 28% is used to produce petroleum product. Again, according to the Department of Energy in Coal Sector report, an estimated 70% of the coal volume produced in South Africa is consumed domestically. We also need to talk about a little bit about export side. Coal exports through South Africa's RBCT, Richards Bay Coal Terminal, which is the primary export port, dropped to 47.9 million tons in 2023. It is the lowest since 1992, when the peak volume was in 2017 at 76 million tons. So junior coal miners in Africa continue to leverage various opportunities in both local and export markets. These producers can benefit from the rising energy demand in Africa by forming partnership with local industries like steel, cement, and bricks manufacturing sectors. Despite the worldwide trend towards renewable energy, coal continues to be the crucial component of Africa's energy blend. Junior miners have an opportunity to position themselves as collaborators in the energy shift. So they offer dependable and transitional energy options while aiding in the advancement of renewable energy infrastructure. Investing in coal beneficiation to produce higher quality products like coking coal or coal-based chemicals add also value into the ROM coal, which is being mined. Partnering with steel manufacturers or industrial users creates additional revenue opportunities for the junior miners. According to another report in 2023, South African coal export faced challenges due to decreasing international coal prices, which increased pressure on most of the junior miners' break-even cost. A shift in export destinations then developed with a move back to Asian markets, mostly from Europe. Despite having plentiful coal supply, South Africa experienced low coal exports in 2023, mainly due to transportation inefficiencies rather than a lack of product availability in the country. Looking ahead, South Africa is committed to transitioning from coal-fired power to renewable energy by 2027, as outlined in the Just Energy Transition Implementation Plan. This plan focuses on consideration for local communities and workers, emphasizing a balanced approach to energy sustainability and social responsibility.
Selim, your next 3 slides are the good ones. I want you to get to them, but we are running out of time. So just
Okay.
to yeah. No, but please get to your slides. I want you to, because I mean they make good points. So just
cool. If you talk about funding challenges and strategies, which is the main purpose of this presentation, exploring alternative financing options can be key for junior coal miners in order to access funding for expansion and development. One strategy is partnering with larger mining companies or stakeholders through joint ventures. Another option is seeking investment from private equity or venture capital firms specializing in mining industry. Government support through programs, grants, or incentives can further boost financial resources for juniors. By actively pursuing these ventures, junior coal miners can secure the funding needed for sustainable growth and development in mining industry. So lastly, I would like to share on the export side, we have spoken about this stuff before the lunch, but insufficient transportation, we need to emphasize that one, can delay coal producers' ability to transport their product efficiently, especially on export market. Additionally, limited port capacity and preferences for larger coal producers can limit juniors' access to expand export channels. To address these issues, again, collaborating with logistic providers and policymakers can help, or collaborating with other mining companies in the industry may also help. If we have 30 seconds, I would like to talk about this one.
yes, no, absolutely. Okay. No, I know your slides. That's why I want you to get to these ones.
Okay.
So get to them now.
Okay. So, when it comes to mine closure and rehabilitation, which is fundamentally important for mining industry, especially for junior mining companies, it is also one of the other subjects that we need to talk, but I'll just summarize. So according to Department of Mineral Resources and Energy and South African government's regulation, nearly 80% of mining companies in SADC region face challenges related to mine closure and rehabilitation. These challenges stem from insufficient planning and budgeting for environmental management. To address these issues, it is important to prioritize environmental responsibility by implementing best practices in mine closure and rehabilitation. So by involving local stakeholders such as communities, regulatory bodies, junior coal miners can ensure transparency, accountability, and shared decision-making in the rehabilitation process. Allocating sufficient fund for mine closure and rehabilitation well in advance, anticipating future costs and potential challenges can also help mine closures. So thank you so much. So we have already spoken about the last slide, so no need to mention on that.
Thank you very much. Thank you. I think it's a question. Perhaps it's a prayer. Can you name drop some venture capital or private equity funds that would fund coal projects? We know where that came from. Is that you? I found her. She just needs 10 million. Come on.
So I can basically answer this question like, there is plenty coal mining companies in South Africa, each and every single of them, they have their own funding structure in place. So that's why I was mentioning mostly collaboration with mining companies within the industry. So before the lunch, that panel, we also spoke about, so this is a space that is created through government intervention to some extent. Andy Clay makes a comment, or perhaps it was a question, that but this is a space where a lot of these assets that are being left behind are no longer, they are previous owners'
second choice, or they've moved away from it. So is this an additional challenge for a junior miner? Are you going to end up with some of these left behind assets, secondary assets, second-rate assets?
So when it comes to coal, we need to understand the merits of coal mining than other mining businesses, is because we were discussing earlier in this panel. So funding opportunities for coal assets, coal development, is not a desired option since 2019 Glasgow Declaration. So junior miners, to be able to develop some assets, so the alternative funding option is one of the main issues. So to be able to make any project feasible for junior miners, one of the main advantages of junior miners is the overhead cost. So therefore, the leftover reserves, depending on the feasibility, depending on quality and stripping ratio of the reserves, these are the opportunities for junior miners, as long as they are implementing the right mining practices in place.
Listen, you talk to the ultimate dung beetle. I have never owned anything that somebody else hasn't thrown away, so I don't get put off by that at all. Dung beetle, fantastic space. Nobody competes with you. Ladies, gentlemen.
Thank you.
Thank you, Selim.
Thank you.
It is tea time. Or coffee time. Or it is so close to wine time, but not yet.